From one retail investor to another. This is Trader 72. We are back for a second time this week. I hope you are well all on this fine end of week. Already the end of the week. Yes, time flies when you have a short week indeed, as we all did, especially in the US and the UK. The weather is still good, holding a little bit less hot because it was a little bit too hot for me at this time of the year, especially in May, but it certainly has cooled down a tad now. So anyway, without boring you to death about the weather, without further ado, let's begin our next analysis this week. Now, we have got a special one here. It's the Taiwan Semiconductor. Yes, ticker TSMC, guys. Now, we're going back into the world of chips, AI, which obviously is the main driver of the markets so far this year in a massive way. We are at all-time high on the Nasdaq and the S&P, and it's all driven by not just the Mag 7, but no longer as much as the Mag 7, but by pretty much the chip makers, the future of AI chip makers, the little chips that we put into everything that will possibly run our life, guys. So this is going to be an interesting one. Now, we're looking specifically at TSMC, Taiwan Semiconductor, because I feel that in the modern technology landscape, software may be capturing the headlines at the moment, guys. I think this company is placed as a specific role within the chain of AI chips. It stands alone. It dictates really what is going to happen in terms of manufacturing, and it is basically ultimately the bottleneck for controlling 72% of the global advanced foundry market share. So it is basically a big old manufacturing only, not chip design makers. We'll go into that in a minute in terms of details, but pretty much in terms of actual manufacturing, making the chips on behalf of their clients, which are notoriously big clients, among them, of course, Nvidia. As the primary manufacturer for the tech titans like Nvidia and Apple, obviously AMD isn't just driving wave of AI boom, but it also owns the infrastructure of the actual chips itself. So this analysis of TSMC is going to be basically a massive $500 billion order pipeline. Effectively, it's I mean, staggering the amount of money that these guys are actually making. So let's have a look at what the value is of that stock as well, because it'd be interesting to see where it sits with the rest. I mean, we all expect those companies to be way above valuation, but I think if we dig long enough into the potential of the company going forward and the actual share price, it will be interesting if they correlate at all between the two. And I think this is what I'm here to do this for you guys. Now, again, I have no financial background. I'm doing this purely as advisory. This is me doing my own research with experience of trading for the past 10 years. So please don't take this literally. Do your own homework and see if this might sit right for you in your portfolio or just as a single purchase of a share. So they will obviously sit into various different ETFs, of course, as well. So make sure that you do check that, whether or not, if you do have an ETF, which is obviously a pie of different financial instruments, that they're not part of that pie, because a lot of these chip makers will be at this stage. So without further ado, let's start with the actual basics of TSMC and who started it. Now, I've got a little bit of a clip to show you guys, but this was sounded by a guy called Dr. Morris Chang in 1987. Interesting little story in terms of how it started. So let's have a quick look at the clip.
That's why Morris designed TSMC to be a super factory, denied a promotion, so he started the world's most important. Morris Chang grew up in China, but left to study engineering at MIT. While he failed his PhD exam, he got a job at Texas Instruments and eventually became vice president of its semiconductor business. After a 25-year career, Morris quit after being denied the CEO role at TI. Taiwan's government reached out to him asking for help in building a chip factory. So he started Taiwan Semiconductor Manufacturing Company in 1987 at the age of 55. At the time, tech companies had to both design and manufacture their chips. That's why Morris designed TSMC to be a super factory that all the world's tech companies could depend on to get their chips made without needing to invest billions in their own factories. Today, TSMC is widely considered to be the world's most important company because it produces over 90% of advanced semiconductors. If it were to go away, even trillion-dollar companies like Apple and Nvidia would be doomed. Morris stepped down.
Well, as you can see, at 55, it's not a bad age. I mean, it's about pretty much what I am now. He's probably a multi-billionaire billionaire, and there's still hope for all of us if we decide to change job and do something extraordinary. But he certainly is one of a kind from that point of view. So as he explained there from the video, it is an unusual company in terms that it is actually predominantly one of the main markets of actually manufacturing the actual chips. Now, it's called, so the 1990, there, as you can see, the birth of Fabulous Revolution. What does that mean in terms of Fabulous? Well, it's a fabrication plant. Just for some of you guys who might not know Fabulous is, it's design computer chips but does not own a factory. So basically, Nvidia, AMD and Qualcomm do not own factories, but actually, obviously, Taiwan Semiconductor does. So that's why it's called Fabulous. So it's a fabrication plant, or Fabulous, no factory ownership, just to explain what it means. What does that So in the turnaround really in terms of the actual company historically was obviously the iPhone boom, which they supplied the main chip for, and that was in conjunction with Apple, and that's really what put TSMC, I'm going to have a struggle to say this, on the map of the manufacturing side of chip making. So it mastered EUVs, extreme ultraviolet, lithography, while others hesitated. By the late 2010s, TSMC surpassed Intel to become the world's most advanced chip makers. So really the big break was the iPhone and Apple association there in terms of growing TSMC to what it is now. So it has obviously now got number 4 here, as you can see at the bottom there, a monopoly, a huge moat, which obviously is one of the main criteria I look for in any company before I invest, and it certainly has that. It's also done a massive global expansion because obviously of where it's at. Taiwan is obviously in a very difficult geopolitical situation. Again, we'll come to that in a minute. So it has expanded a lot of its factory in the US, Japan, and Germany. The global expansion really is humongous, and now 90% of the world's advanced chips, that's what they make. So that's the kind of basic background of obviously of a TSMS. As you can see there, the Taiwanese government, Philips, and private investors were the initial founder members of that company. So just to recap, really, simple terms, TSMC make computer chips. They are the only company in the world that actually manufacture. They're not interested in designing, which is what Nvidia and Qualcomm do themselves. They're interested in only making the actual chips in a factory for all chips. So obviously it goes from, obviously design, which is made by Apple and Nvidia. Then it goes to TSMC manufacturing, which it uses advanced machines to build the chips. And then onto the chips are made tiny transistors as etched onto the silicon wafers and onto the power of the world used in iPhones, AI chips, PCs, cars, servers, and more. It literally does make chips for every single part of life that you're using, in terms of mobile phone to cars to servers. So it's quite amazing. So it doesn't make chips, they build better than anybody else in terms of that. So they are the world's #1 chip foundry as it is. So that's a kind of a recap for you guys about exactly what TSMC does. So just to simplify things down and to understand it, which even I, being an older man, a generation, had to get my head around about exactly what they did. So this is more for people that really don't have too much of an idea of what they do, and now we kind of break it down a little bit more. So let's get to the breakdown of the actual numbers now, which obviously is one of my favorite parts of understanding how the business makes money. In a very crude way, really, in terms of graphics here, we've got obviously an idea of what their major clients are, which is Nvidia, Apple, AMD, and Broadcom, which is obviously the design of the chips. Now, the high performance computing AI data center is 60% of the revenue of that company. It's followed by smartphones at 25% and automotive at 15%. So amazing explosive infrastructure, reportedly pricing further increase into the late 2020s due to capacity and constraint. They are spending, and of course with all the big boys spending, of course, in terms of data centers as well, we are certainly going massively and very fast towards a very dominant AI world, and I think TSMC could be placed into that equation for sure. Let's break down the numbers now in terms of the P&L here. The balance sheet, really, more than anything else, which is quite interesting. So let's start with, you guys know how I like to break it down. Let's start with the market cap, which is currently at $2 trillion. Yes, $2 trillion. It's absolutely outstanding. These companies were nowhere near to be seen. I will show you guys the chart as well from literally 5-10 years ago to what it is now. It's absolutely phenomenal in terms of the rise of these companies. Actually frightening in many ways. Is it too fast almost to a point? So 2 trillion market cap, that's the company worth as it stands entirely. So if you were to buy the company tomorrow, it would be worth $2 trillion or $2.08 trillion. Enterprise value is currently at 2.12 trillion, so a minimum of nevertheless of debt there involved, but that's obviously because of the expenditure and the capex, which obviously is continuous with making this factory, which I will again come to you in terms of my final thoughts. So it does give a little bit of a debt, but with the free cash flow being at $64.44 billion, which is again another staggering amount. In the last 5 years, it's gone from 51 to 64, so it's almost $13 billion more in less than 5 years, half a decade. So again, you can only think that in the next 5 years what this will be in terms of that. So the lifeblood of the company in terms of free cash flow is humongous. Now the net income is slightly higher, which is possibly something you need to look into. I quite like the free cash flow being slightly above the net income at 1.72 trillion. Again, a staggering amount there. P ratio, as I said, is 34. It was 24, so it's definitely up in price in terms of where it was 5 years ago. I think if you'd bought 5 years ago, you would have been probably quids in. PEG ratio, surprisingly, is just 1. So quite surprisingly, 1 is about right in terms of evaluating the company. As you can see, the profit margin has gone from 35.4% to 42% in 10 years. So again, and a staggering amount in terms of difference there, and where it's at. 56% gross margin. For every dollar they make as a gross margin, they make 56%. That is again another wonderful, fantastic number, really, in terms of return for the company. Compounding revenue has gone from 17.8 to 28, again on the up. So again, a remarkable investment. $266 billion in total net acquisition is quite high. I would say that's quite a bit of money. And they pay a dividend as well of 1.2%. So that's always good to know for long-term value investors. That they are paying some kind of yield, and price to free cash flow at the moment is 31 times, which is quite high. I wouldn't say it's cheap, but again, sorry, excuse me, that is something that you probably would expect from semiconductor companies at this moment in time. Again, just to kind of reiterate on the revenue, it looks like the high performance computer HPC is the highest performer here in terms of breakdown, or the most biggest revenue at 59%. Smartphones are not far behind on, well, half behind on 28%. And an automotive, you have to believe, will probably increase within the next few years as well. Currently at 7%. Internet things at 6%. So as I said, their major clients at the moment is Nvidia, Apple, AMD, and Broadcom. This is an exclusive foundry for Nvidia, most advanced AI chips, and key supply for Apple, AMD, and Broadcom. Nobody else can do at the moment, as it stands, what TSMC does. So that is something to be really thought of when you invest in a company like this. That the moat, the actual foothold of that market is definitely all of theirs. It's almost a perfect moat in that respect, dare I say, because as I said, nobody else does it. I think possibly bar Samsung, I think, and they can't even compete on that. So that's what it is. Literally, I think if we look at the research, they would literally be without that company, they would be literally lost. Let's have a quick look at an interview as well that I've found for you guys. So this is an interview with the head of Nvidia, Jensen Huang, about TSMC and how valuable they are to them.
So I have to ask, TSMC, I think, also is a legendary company in terms of the engineering teams, in terms of the incredible engineering work that they do. What do you understand about TSMC culture and their approach that explains how they're able to achieve this singular, unmatched success in everything they're doing with semiconductors?
First of all, the deepest misunderstanding about TSMC is that their technology is all they have. That somehow they have a really great transistor, and if somebody shows up another transistor, game over. Mm-hmm. It's the technology, and of course, I don't mean just the transistor and metallization systems, the packaging, the 3D packaging, the silicon photonics, all of the technology that they have. That technology is really what makes the company special. Their technology makes the company special. But their ability to orchestrate the demands, the dynamic demands of hundreds of companies in the world as they're moving up, shifting out, increasing, decreasing, pushing out, pulling in, changing from customer to customer, wafer starting, wafer stopping, emergency wafer starts, all of this dynamics of the world's complexity as the world is shifting all the time. And somehow they're running a factory with high throughput, high yields, really great costs, excellent customer service. They take their work they take their promises seriously. When your wafer, because they know that they're helping you run your company. When the wafers were promised to show up, the wafers show up, so that you can run your company appropriately.
So as it shows you there from Mr. Jensen Huang, obviously one of the other big players in the AI world, well, probably the biggest company in the AI world at the moment, and the market itself, it shows you how valuable TSMC is to them, and specifically, obviously, to the customer, that they have this customer care as well as being able to mold to whatever the customer needs, which I think, in terms of blueprint for any company, is super important to have to be successful. So this is now let's break down my favorite next step. Now we know what the company does, what it's about, how it is one of a kind in terms of moats. The management is obviously very well established and knows how to deal with clients, and the meaning of the company. We are now coming to the discounted cash flow, which is my favorite way of calculating whether or not the share price of a company is overvalued or undervalued or overvalued in any respect. So obviously with TSM, it's a very unusual, because it is such a good business that you could almost kind of put in the back mind that you could think that this company is going to grow regardless of whatever happens. Even if it's slightly overvalued, you could probably buy in. My guess on this is that it is still undervalued at the price it's at the moment. Now the share price is currently at 408. Now I had to I was going to go for a fairly conservative growth, because obviously it's all about the growth and what we feel the growth will be going forward on the forecast of the free cash flow. I went for an 18% growth, considering that for the last 5-10 years CAGR we're looking at 25% growth. I was quite conservative in the way I looked at putting that one down. So as a case there, as it stands, I went for the 18% growth for the next 10 years, with the terminal growth of 3%, which is the standard American GDP, with an 8% discount or whack on top. So once we've done that in terms of calculating, obviously, the total enterprise value, the net minus the debt and the equity value and the shares outstanding, we came at around anything, and I didn't put a specific number, but around 485 to 520. That is where I would estimate the intrinsic price. Now I would say it's not aggressive, but it can be quite aggressive. You could have gone for 15% if you really want to be conservative. I went a little bit higher than that. 485 to 500, so let's call it 500 really, in terms of I think where it would land. You're still looking at between 15 and 18% MOS, which is margin of safety, which you guys know I abide to at all costs. Now it's not quite in my ballpark of 25% minimum, but looking at this business and how it works and how it dominates its modes, it is obviously something that you guys will have to work out and balance out. I still think an undervalue is good, considering that a lot of their peers or their clients even are overvalued at the moment by a tremendous amount, and I think it's something that you guys need to obviously work out for yourself. But that gives me a rough idea of where we think it is. So as you can see there, the CAGR for the last 5 years, 23%. So I think 18% is about right if we're looking at pulling back a little bit as the company grows and gets to a certain plateau. I would obviously include in my 4Ms, which would be obviously a net margin of 41%, an ROE of 28%. Again, it's well above what I would expect at 10 to 15%. It really seriously reaches every single criteria that you can think of in terms of the actual finance and the ROE, which is something I look at very much, or the ROIC as well. So from that point of view, I think that gives you an idea of where the share price is. I would say not the market calculating, but as a more of a discounted cash flow model. So we come to my final thoughts. Now, we've checked the meaning of the company. We've checked the moat of the company. Check on both sides without a shadow of a doubt there. We've checked also their balance sheet, which, again, the numbers are, again, phenomenal in terms of margins, gross and net, obviously net income, and also the free cash flow and their revenue being compounded. So I don't think there's any doubt that the company is making shed loads of money and also has amazing margins, more importantly, in terms of now and going forward. Now, the discounted cash flow is obviously not at the rate that I would normally go into, which is 25% of margin of safety from its intrinsic price. It's still between 15 and 18% at the moment, and I think it still is pretty good if you want to go in and balance the two together, the risk of a company already being quite high in terms of expectations and share price, and try to squeeze as much as you can out of that MOS till they reach maybe $500 a share. So it is not a risk because it still has a discount, but it's not as good as it would be if it was at 25-30%. But of course, the company's not going through distress, which a lot of these companies would be if they were at that 25+% of MOS. So let's have a quick look. I mean, I think we've realized that the TSMC is an indispensable mode, pure play foundry model. Unlike Intel and Samsung, TSMC doesn't design its own chips to sell to consumers. It's pure play foundry, and I think that's the key point here. It's a pure factory, and that's all they're interested in. That is what they say. They stay in their lane. This is what they're good at, and this is where they stand. So they don't deal with the design. Obviously, they have major clients such as Nvidia and AMD already established. Does most of the chips for mobile phones, cars, PC, computers, etc. And the world's power for future. So going forward, obviously, will be even more relied on. Advanced node monopoly when it comes to absolute cutting edge, the ultra small, highly efficient chips that power advanced AI data centers, smartphones, and autonomous vehicles. TSMC has a near monopoly. It's even better than I think Visa or MasterCard or even some of the duopoly companies like Moody's, even in S&P Global in that respect. They are the only one. This is, I think, the key point of potentially, if you are looking at investing, where that would definitely sway it. Now, obviously, on the other side of that, and I do like to always have, as you know, a bull-bear case in that respect, the geopolitical concentration of Taiwan is a risk. We know that there's obviously, it's a delicate area of the world with China wanting a piece of it at some stage. It's mostly advanced. So let's have a quick look more and focus here in terms of what we think. So, geopolitical concentration, vast majority of TSMC, most advanced manufacturing is physically located in Taiwan. Obviously, they've expanded their factories since then to the US and Germany, which I think is a wise move. Because of the ongoing geopolitical tension regarding Taiwan's status, Wall Street applies a geopolitical discount to the stock, possibly why it may well be an 18% discount currently because of where it sits in the world. But obviously, it's obviously diversifying its buildings to Arizona, Germany, and Japan, but moving advanced semiconductor manufacturing in an agonistically slow multi-year process. Now, on the other hand as well, there's the capital expenditure, the capex, which every single one of these companies are having issues with at the moment, with the market specifically staying So staying in the game now, this is something very important for you guys to understand, is that to stay in the game of constantly updating those chips, they have to spend money themselves. So they spend between 30 and 50 billion dollars a year just to build new fabs by cutting edge EUVs, extremely ultraviolet lithography machines, which obviously enable to make the chips. And researchers the next generation of cyclists, so it's constantly R&Ding it and changing as the chips change, especially for the lithography and the ultraviolet, which actually is the component of making the chip. It is a treadmill they cannot step off. If they stop spending, a competitor like Samsung or revitalize Intel, which is making a comeback at the moment, Intel could theoretically catch up. So they have to have a massive capex today, unmatched leadership tomorrow. So that's something that you guys need to deal with or to understand. So it's absolutely, basically, it's a bottleneck of global technology. If you believe in artificial intelligence, high-performance computing and cloud infrastructure will continue to expand over the next decade. It's almost impossible to imagine that future happening without TSMC extracting a massive toll along the way. So would I invest in this company? I think this is actually probably one of the most difficult decisions I've had to think about in terms of getting all the facts together, and also mostly on facts, because obviously when you invest, it's not about a feeling, it's about the facts that are given in terms of the share price, the value of the share price, what does the company do, and what is the future of the company going forward. Now, I think for me at the moment, it would be probably a no, due to the fact that I'm going to show you guys why. Because its P ratio is still nevertheless quite high at 34, compared to others maybe not, but you have to compare it. I think the discount of the intrinsic price is not quite there for me yet to invest. I like to have a criteria of the minimum of 25%. It's currently really around 15%, so slightly short of that. And the concern of the boom of AI at the moment is roller coasting already. It's almost like I'm jumping on a ship that's full steam ahead already, and I feel that it could be quite dangerous for me just to hop on while the music is playing, and I don't want to end up where I turn up where the music stops playing. Now, I'm not saying that these guys are not going to be around. They are definitely something you guys need to have a look at in terms of, out of all the other companies, I think they would be the only one I would suggest might be worth still to jump on if you've got the chance, and if you believe that the company has all the right attributes for you to put your money on that stock. So for me, it's more about the valuation and the company. The valuation of the company as it stands is absolutely outstanding. If I'd seen that company 5 years ago, I would have definitely invested in this. Knowing what I know now, obviously, the fact that they have this huge skill set. So let's have a quick look at the share price and the entry point if you guys were interested in that. So share price wise, Taiwan Semiconductor Manufacturing, we are looking, as you can see here, at a huge rise really from pretty much mid 25 last year when it was sitting at 139. So that's what I'm saying. If I'd seen this now and realized the potential there at that time, I would have probably invested around there. It was just below the 50-day moving average, just above the 200-day moving average, and that possibly would have been the sweet spot. Now, it went up a notch there to 235 and again at 301. And of course, recently with the boom of AI from Nvidia to AMD to Broadcom to also, various different companies that are AI-led, ASML as well, of course, the other one, they've all moved into tremendous speed. It is currently at $415 a share, which gives you about 15% discount off its intrinsic part. Now, that's assuming that you guys give it a fairly solid, aggressive growth rate for the next 10 years. Now, if you were to pull that back, it'd probably be even less than that. So that's hence why I've got my reason for maybe keeping on my watch list for now more than actually investing straight away. So I think probably the correct entry point, if you were looking at potentially, is probably looking back more towards the 300 mark. I know that's probably quite far back at the moment, and the chance of that collapsing would be maybe on the, if the market really had a major pullback of 10 to 20%, and even then I'm not sure if those companies would be that affected. Now, another option would, I suppose, would be to go up at 380 and try to catch it there if you are a quick short-term buyer or investor. That could be probably a potential there to wait for it to fall back to about 380 mark and then pop it from there. or potentially, I mean, this is obviously based on a weekly chart, and at maybe 400 would probably be the latest that I would maybe even consider going into if I was to buy in and out. In terms of long-term value investing, I think that at the moment you'd be looking, I mean, I would be looking more at the levels of about 320, 330 at best, which would, give it a good 10-15% pullback. But how do we know that this is not going to go up another notch? Well, that's your choice, guys. Decide what you want to do. I'm just giving you my advice in terms of where the share price is at the moment. But this is a phenomenal move from last year. It's almost 10x really, or 15x really in terms of move forward. The staircase effect, I call it, is absolutely magnificent. But how long can this keep going? That is the big question. So I hope you guys enjoyed this. I was, like I said, fantastic company, fantastic story. But the share price as it stands compared with its valuation for me doesn't quite equate for me to jump in right now. Although I will say that it is on my watch list. And if it falls back towards a certain price, that a certain support line, I would certainly then consider investing. But that's up to you guys to decide what you want to do. Please comment below if you agree or disagree with me, whether or not you're already investing or not investing, and smash that subscribe and like button, please. That would be much appreciated. So moving on now very swiftly to the news of the day and where I'm at with my portfolio as well. So currently my portfolio at the moment is obviously Adobe, which I've had on long-term basis, crude oil, which also I'm sitting on in terms of short position, still just in the red at the moment. Netflix also, which I bought at 91.5. I added Netflix yesterday, an extra position at currently another £3,500. I bought it 87.54. I thought that was a good time to buy back in, and also lower down potentially the price that I bought it in down to now 89.19. I also added an extra position to Uber yesterday at 70.79 after buying at 72.36. So currently now Uber is my third biggest holding at 5,741 shares. Netflix is second on 6,243 and followed by Adobe on 7,679. I sold my Meta yesterday at a good price, fairly good profit at 6.15. Unfortunately for me, I held it for a little while, and as I dumped in, thought it was doing well, it retreated back. There was some kind of news about subscription for a certain of Facebook and Insta, which popped the share price to 6.30. So typical. If I had hindsight, I would be a millionaire and just missed the rise. I've waited very, very, very long for Meta. Well, not very long, a short term for Meta to pop. I was very patient, I thought, but not patient enough clearly, and I took the profit, and I probably would have killed it about 300-400 quid instead of the £200 profit I made on that one. So again, for clarity, for you guys, to show you that there's no BS with me, this is what I am. You're not, all your stocks when you buy, they're not always going to be in the green. You need to be waiting patiently for that to happen. Been on a good roll recently. There's been quite a few bit in and out. As you know, I am a mixture of value investing, where I've had Adobe for nearly a year. And also I buy in and out stocks within potentially 1 or 2 weeks to 3 months to whatever. So whichever way, my structure of my entry point and my get out point, my profit taking, if it does reach that and I feel it's right, or I feel that the stock might come back down, I tend to go in. Obviously, we all need cash flow, so that's the way it works. That's the way it rolls. Quickly going through the NASDAQ, currently at the moment in red by 157 points. We've had some toing and froing with US-Iran, which is the main news. We have got 1:30. This is my local time, so I don't know what that means in the States, if you're stateside. And of course, the end of the Iran war, that's looking at the moment unlikely. A further aggression from the US and Iran back late last night, so we don't know where we're at with this. I have absolutely no idea whether or not there's going to be some kind of peace treaty. I assume there's going to be one at some stage, but they need to do something fairly quickly. It looks like the crude oil is still hanging around the 97.5, so it looks like the markets are potentially still pricing in some kind of agreement between the two within the next, whenever at the moment. So it's holding on tight. So there we go, guys. That is my analysis. I hope you enjoyed. Like I said, subscribe and like. Let me know what you think. I can always do with more comments. I don't have enough of them, as I keep saying. And I thoroughly enjoyed doing that. I think it's the most interesting company that I've researched so far in terms of where they're at, the dominance, I think, of it. And I think it's definitely worth a look at for now. But like I said, I'm not here to, I have no finance background, so it's up to you guys to decide whether you think it's an investment or not, or maybe sit on the sidelines like I do and see what happens on the watch list. All right, guys. It's the end of this week for me. I'll give you some updates, obviously, next week when I'm back with another upload. I hope you enjoy your weekend coming up. Longer week next week. And I'll see you all soon. So from one retail investor to another, from Trader 72, over and out, guys. See you soon. Take care.